That was a long process, but I'm glad it's done.
Oh yeah. Well, now we know how it's done, Akil.
It's never taken me so long to complete a deal.
Hmm.
Yeah, especially when it was approved like 2 months ago.
Yeah, no kidding, eh?
Nope. I'm just taking all the courses for boss right now, and the rules are just over the top for compliance.
Yeah, it's I know Stu's been on top of apparently Ontario is even worse than Alberta. So consider ourselves a bit lucky out here.
Worse with regards to what? Sorry, I came in late.
Oh, just
Compliance.
compliance. Yeah.
Yeah, Kendry.
Akil's going through.
Kendry wise.
Yeah. BC and Ontario both are very heavy. And
Yeah.
yeah. And Saskatchewan too. So well, good morning, everyone. Welcome to Friday's Seven-Figure Performance Lab. I hope you're all having a great week and being able to still find yourselves in a position to be productive despite, for those in Calgary, despite all the stampede events, and for those in places like BC, despite all the great weather. So
Keith,
it's
your voice sounds rough, man. Is
my
that from the
voice is a little
stampede?
rough. I've got a cold, unfortunately. I've come down with a
Oh,
cold, so yeah, I had sore throat yesterday, and now today, guess what? I got a summer cold. So yeah, yeah. So that's the way it goes. It's the way we roll sometimes, right? Just happens. So it might have little to do with nothing and everything with all the stampede events this week. So, but that's all right. Um, Last week we were talking about resilience. And so before I get into this week's topic, I wanted to just touch on resilience and just hear from anyone who found themselves in a position this week where they needed to, respond, recover, rebuild, and rise from something that came up that, required them to tap into their resilience. So, if anyone has had that kind of can think of or has had that kind of experience this week, I'd love to hear how you handled it.
you
Go
should.
ahead,
Yeah,
Darnelda.
Darnelda, go ahead.
So I mentioned about a deal that I'm trying to do under the refinance plus improvements program, right? Where they're
Yeah.
building a duplex on a lot that has a single family house as well. My BDM, took it to his credit people. They said they didn't think they could do it, but suggested he talk to the insurers, and insurers said yes. Well, then my BDM went on vacation. So I sent in the deal, and the underwriter came back and said, "No, we're not going to do this." So I mean, I've worked on this for probably a month and a half, right? And so I just wrote an email and said, "Here's what, where we were at with this. I'm requesting that you go to the insurers." So I haven't heard back yet. I think they're still going back and forth, but rather than just going, "Oh, it's not going to happen," whatever, it was
Yeah.
okay. This is what the situation is, and this is what I'm just going to deal with it.
Yeah.
Just be with it.
Yeah. And that's just, that's a great form of resilience that we often go through with any individual deal and getting pushback after we've done some initial legwork already. And so that's great. Dougie, go ahead.
I was gonna say, discipline, right? Of tackling those small, boring tasks on a daily hourly basis, I found. Small little things like putting a deal together, at least get the proper documentation or data, right? Just to prepare, just small little things. Like sometimes we have to go into do a little bit of research, small stuff, right? So over time, when a deal becomes so doc heavy, we already, second nature, right? It's like, you know what, I can handle this no problem. Versus in our beginning years, those doc heavy conditions, it gives me a headache, right? And then I cave, I go sideways. So over time, with those small little daunting pieces, it will just build up that resilience. So that's what's going through my head right now. That can apply to what we do.
Yeah. Yeah, the biggest, some of the biggest spaces of resilience are often come in the lost the lost deal or the deal recovery from something that doesn't come to fruition and being able to move on from it. And so for myself, I had a client that there was a client who I originally did their lot purchase, then they went to a different broker while dealing with me to do their construction mortgage, and then they come back looking for their financing and to take out the construction mortgage, the private construction mortgage. And they had already been dealing with a broker. I know exactly where they ended up getting they gave me details on what they were offered through the other broker from the lender they went to. And they came to me looking for something different because they don't want to have to pay the amount of fees. I'm certain it's Capital Direct, and they don't want to have to pay the 1.5% fees, even though the rate is that great 409 rate. And so, because of their past behaviors, I told them that I required the letter of exclusivity in order to work with them. It was the only way that I'm going to work with them. And they came back and said, no, they're not willing to do that. I worked with them before. I should be willing to continue. And I said, no, it's unfortunately based on past behavior. I'm not willing to work without the letter of exclusivity signed. So if they aren't happy with that, I'm okay with it. And what did I get? I got two other new deals or three other new deals in my inbox later that afternoon, from a different client. So it's, often our mindset is where our resilience shows up the most. And, I don't know if you believe in the universe and the universe coming around and supporting you and in the things you do, but to me, I was like, there you go, right? I could have ended up wasting a whole bunch of time with someone who never was going to actually follow through, and in the end, I end up with working with a better client who's committed to me. So that's a great, so for me, that was a form of the resilience that I had and sticking to my own values. So
I have something, Keith.
go ahead, Nicole.
So I totally agree. Like, there's times when you're just like, Stampede Week has been really hard on us because we've been going out to all these events and everything like that. And Amy and I have been really busy, and I get it. Like, you end up feeling that you can't do this job when you're that busy. So Amy and I ran into a problem too this week, where the client, or actually it's all approved, everything's done. We were told that the mortgage was instructed. Some lender came back and they're like, nope, we're not funding this deal. We have all these deposits that are coming into our account that cannot be explained. So unusual transactions. And last minute, they decided to cancel the whole deal. And it's supposed to fund on Tuesday. And I was like, okay, Amy, what are we going to do? We have nothing. The clients are frustrated. We were getting emails. They were writing us emails every day saying, if you don't reply at this time, 12 o'clock, 9 o'clock a.m., like we were about to, I was like, oh my God, we're going to get sued. We're going to go to errors in admission, things like that. And then, you know what? If Amy and I didn't stay calm and relax, we would have never got this done. The good thing is I had a backup plan where they had the deal approved at Scotiabank. So of course, we have an amazing underwriter there. So she pulled through. We got it instructed. It's actually funding now. But those are things where you're gonna have to like, you might not think that everything is good, but you do have to remember that not every deal is gonna fund and something may happen and you may have to do other sources to get a deal through and then be grateful for the underwriters that you work with
Yeah.
because they will do amazing things for you if you know, I think loyalty and integrity is a big thing.
Yeah. Yeah, absolutely. Absolutely. That's fantastic. That's a another great example of resilience and how we just often just do these things. Like we just do them out of our commitment to our clients and sometimes out of frustration with things that lenders do. Um, but we don't necessarily celebrate them within ourselves because we feel like it's almost like an expectation that, well, we should do this. But the reality is, for you and Amy, Nicole, not every mortgage broker would go to that extent to resolve the issue and commit to it. Um, and also sounds like you had a backup plan from the start because something from the start told you needed a backup plan. And so you already had a plan B kind of.
No, technically we never have a backup plan. For some reason, like the universe
Yeah.
made it that we actually had a backup plan on this file. It was like,
Yeah.
wow. And Amy's like, oh my God, Becky canceled that deal. And I'm like, oh shoot. So we tried to recover it and she actually didn't cancel it. So it was just the universe talking to us.
Yeah. There you go. That's awesome. That's awesome. I love it. That's a great example. Today, I wanted to have a little more discussion around the fact that revenue is something that we build. It's not just found. And we are always in a position where we have to be intentionally designing and creating sustainable growth in building our clienteles, but also leaning into and learning how our clients can be additional sources of revenue for us and not just funding their mortgage and being a provider of additional services, opportunities, connections, connectivity are so important. Because when we design for revenue, we can have passive sources of revenue as well. Simple Insure is an example of that. Maybe it's through home and auto. Maybe it's through referrals to other partners that you've built. Maybe it's through utilities and home services, whatever it is. So it's not always about just hoping that there'll be more revenue from more clients and relying on that one source of income. Design multiple opportunities of multiple streams of income so that you can create value and generate revenue at the same time. Because your revenue is often connected to the self-worth that you give yourself. And people often think about worth in only the terms of like what the dollar numbers look like if you do a spreadsheet versus thinking about how you feel when you know that you have additional sources of revenue coming in that are going to support you. So the way you relate to your revenue is often the way you relate to your self-worth. And your confidence about how you communicate your value and charge appropriately for the skills, knowledge, and information that you have are how you see the impact you create. And we probably are at times, and this goes a little bit to what Sim referenced towards last week, and that is that it's a value perception problem when we want to undercharge for ourselves. It's not a pricing problem, it's a value perception problem that we have for what we owe, what we truly are worth. Because revenue is built through strategy, it's not built by chance. And your relationship with revenue reflects your relationship with your value. Because even though we're in a service business, we're not selling gadgets and widgets and gadgets. You still have to have multiple paths to grow an income, but they have to be the right paths. I don't know how many of you know the Blockbuster story, but Blockbuster decided that the way that they were going to generate additional revenue was to start selling Coke and chips at the front of the store when people would come and get movies, as opposed to taking advantage of the opportunity to be part of Netflix from the beginning. And they said, no. Well, how has that turned out? Right? Yes. Yeah.
Oopsie.
Netflix killed the video store. So it's important that you consider that you need multiple paths of growth and income, because having that recurring revenue that's monthly and or annually is what helps create that long-term stability and helps take away the fear that we have within ourselves about revenue and income. And that requires us to have that intentional planning and consistent value creation, and including every client in that process. Because every business needs multiple paths. You have your core service, where your expertise lies and delivers you revenues based on that expertise. But what are the opportunities to create that recurring revenue on monthly or annual, maybe subscriptions or insurance, whatever it might be? And then what are new services that are adjacent to what we do that can be offered to clients to meet their needs? Do you have people that you work with that will pay you for referrals and introductions for some of those services that your clients want and need to be introduced to, that can generate some additional opportunities? And that's where those strategic partnerships and creating value with aligned partners is so critical. And for me, this is where my business networking comes into play so much. And the business networking that I do so much of is to help build those strategic partnerships. Because it's not about you doing more to generate more revenue. It's also about using the people you already have to generate more revenue. And when you have complementary services, you can always provide and serve your clients in a better way. And we often fail to consider and look at this, especially for those that have already built up a significant database of mortgage clients. And for those that don't yet maybe have that database of mortgage clients, what about your friends and family that maybe aren't looking for a mortgage, but have other services that they already need and use, no matter whether they own or rent? Because
But
that
Keith,
recurring revenue compounds. And if you're only looking at mortgage commission, you reset to zero every month. And then you have to start over to satisfy what's needed for your revenue for that month to live that month. So that recurring revenue is what can stack. And when you stack every month, it builds a foundation that then the reset of commission each month becomes a less daunting thought process and consideration for where's the next paycheck coming from. And that's where you turn all that effort into stability and that enterprise value so that you have that predictable revenue, which makes your business sustainable and scalable and creates greater possibility and opportunity for your business to have value in the future.
Keith, can I ask a
Yeah,
question?
you bet.
Are you when you're referring to partner services, are you monetizing that?
Absolutely. Where you can, where and when you can. So I'll give you an example. I took an Uber down to an event yesterday. The Uber driver happens to live very close to me. He was just starting his shift. We start talking. He's a realtor. So we're chatting about real estate and stuff. And he says, and so then he's like, well, would you be willing to set up a referral partnership with me? He's like, do you pay referrals? I'm like, well, I said, I am. I said, as long as, making sure that you understand that as a realtor, you make a lot more money on a deal than I do as a mortgage broker. He's like, yes, yeah, you understand that. And I said, so yes, I'm willing to. He's like, well, I've got some of the other partnerships that I do 25%. Said, if you're willing to return the same, I'd be willing to do the same for you. So, all from just talking to the Uber driver, right? He's been a realtor for 10 years. And so, the fact that he's still driving Uber, I don't know that he's doing a ton of volume. However, right? So you just don't know. It could be with a plumbing company, could be a roofing company, could be a contractor, any variety of different options. So that's where this comes in, Stu, and so where is your next revenue opportunity? I have, it might be, maybe you're investing in real estate and it's through investments. Maybe you have others. When it comes to services, though, is it the Simple Insure? Is it other insurance that you've got a connection with? So identify what those additional values are that you can offer your clients. If you're sending clients for commercial insurance, and those are big, expensive policies, is that commercial broker willing to pay you a referral fee? Akel, have you ever received a referral fee for commercial insurance referral?
Actually, unfortunately, never.
Then the next question is, have you ever asked?
Good question. No, I haven't.
Yeah. And that's part of the problem is we don't value our connections. Like the people that we know, we don't give them enough value to say, hey, you want me to send my people your way. Is there a little bit of what's in it for me?
No, what you're saying is a very valid point. I totally agree.
Yeah. So how can you solve a problem differently? This week I have a client that working on his multifamily build. He'd gotten a mortgage from a private lender to buy his lot last year, where it had a house on it. He tore the house down. His renewal's coming up. Sends them the revised insurance, proof of insurance, and it's now a commercial insurance policy. And guess what? No longer exists on the lot. There's no house. And the lender's like, right away, we're going to send you to foreclosure. We're gonna send it to the lawyers. We're going to foreclose because you changed the property. You didn't talk to us about it ahead of time. So he contacts me. He's like in a panic. He's like, what am I going to, like, what do I do? He's like, do I tell them? I'm like, you just have to be upfront and honest with them. And then we'll find you a solution. So I went to work. I got him a solution. I got a commitment letter. That private lender called me and reached out to me, said, "Hey, we understand you're working on this." I'm like, "Yeah." They're like, "Can you keep us in the loop?" And within 48 hours of all this starting, we're ready to have mortgage instructions sent and fund by the 21st. And everybody's happy. And so is it going to be a monthly recurring revenue? It's not. However, it's because of that ability to understand services and what we can provide our clients and solutions that we can get some new income streams that were unexpected. And so what new income stream can you begin building? I happen to be part of the ACN network and have been for about 9 years now, 8 or 9 years. And because they offer utility services, home, internet, TV, travel services, all kinds of different things. Not always, it's not always, and it's not every month that I get new clients in, but for the clients that I already have that are getting utilities and using utilities through that affiliation, I generate additional revenue each month because they're using different services, whether it be internet, travel, utilities, so many different things that they offer. And so it's all a matter of just creating that passive income. Is it a ton? Is it thousands of dollars a month right now? No, it's not. However, over time, it compounds. So what's your action plan for the week ahead? Look at your current revenue sources and identify any gaps. Look for untapped opportunities within your existing client relationships or referral partner relationships. Kel, what about those commercial appraisals that they're charging $4,000, $5,000, $8,000 for as well, right? Design additional ways to create value beyond your core services. Explore recurring revenue offers that support clients over time and build with long-term enterprise value in mind. Because we have to be careful that we're not waiting for revenue instead of intentionally creating it and relying on that single source of income and diversifying without staying aligned to our core mission. So I know that there's agents here who have said, well, they want to go into commercial. Okay. Is that aligned with your core mission, or is it purely because you're just trying to get multiple sources of income, but without understanding what that means if you haven't done the knowledge, the training, and the experience to make it happen? Akil's, focuses on commercial. Doesn't mean he's going to go start jumping over into residential because that's not where his core value is. So design your revenue with intention. Build systems that create lasting value, strengthen your client relationships, your partnerships, and generate consistent growth over time. And when you do that, now you start to create value in your business so that you could have an equitable event in the future where your business has a greater value than you ever imagined. Any questions, comments, thoughts?
I do.
Go
Hi,
ahead.
everyone.
Hey, Kenji.
So I was curious on the additional revenue sources. So you've got your commissions and possibly trailers, depending how you set up each individual deal. And I'll use Simple Insure as an example. So do you track and go, hey, you know what? I invested this much time in the sales process and learning about it, and I've made this X amount of dollars. you know what, that's a lot of money. I'm going to learn a bit more and some new sales strategies. Like, so do you look, or like your referral source income, do you look at those and go, you know what, this is adding a certain percentage. I'm going to focus more on these or learn more?
It's well, so it depends. It depends. It depends. So, for example, um, my realtor partnerships that I have, and I mean, I happen to be licensed, but and so it's easy for me to do referrals. But for the referral partnerships I have, I don't start going out looking for people to refer to the realtors. It's if I have clients that come to me that don't have a realtor connection that need a realtor, then I'll make the connection and take it and I get that advantage. But those are not what I would call kind of monthly recurring revenues, as opposed to, like you said, the Simple Insure product, where you're generating some monthly residual income. And honestly, for myself, I would say I probably don't analyze it how much is coming in each month enough. And surely, probably out of time of going into Boss and figuring out how to create that report and have it and to do it. Um, Aside from there being, a simplistic report that was sent to me each month that said you generated this much revenue from Simple Insure this month. Um, it's one of those things that if we were receiving it, great, but it's not something I'm going and actively reviewing in that sense each month. For what I do with ACN, certainly I keep an eye on what residual I get coming in each month. And, I certainly try to encourage clients to take a look at those services and what might be possible for them. So there's often opportunities in front of us that we will ignore ourselves purely out of our own belief of somebody's not going to be willing to do that with us, or that it's not possible. It's one of the reasons why my personal vision is that all people are living a life of opportunity. Hey, you bet it, Kel. Have a great weekend.
Thank you for that.
You're
You
welcome.
made me think of something that we could do on the back end that could maybe support you a little bit more. So I appreciate it. Thank you.
Oh, you're welcome. It's again, it's sometimes we don't know what we don't know. And until someone else goes, hey, you know what? This would be something great to be able to review each month. Yeah, you know what? That's probably not a bad idea to be able to review and see it each month, to be able to know how much what you have done is paying off. And if you did just a little bit more, it could pay off just a little bit, pay off that little bit more each month for you in revenues. So, and like I said, a lot of times it's the low-hanging fruit that we ignore, because the low-hanging fruit maybe isn't the big dollars, but that low-hanging fruit that isn't the big dollars is what can build that recurring revenue that builds up over time.
Yeah, I think I agree. I think sometimes um just chasing revenue without looking at the other side, right? Like, you got two pockets and money's going in, but it's leaking out the other way, right? So, just as an investor, right? Just sometimes we take for granted, I guess, like even like utilities, right?
Mm.
Like, hey, I'm paying like 50 to 80,000 dollars in utilities a year, and do I actually have the best rates? How have I protected myself from tenants abusing utilities? Like, what if they're running a Bitcoin operation? And so you figure out how to start to kind of protect the downside of those things, right? And really
And
got to
then
look.
looking at, well, if it is $50,000, $80,000 a year in utilities that you're paying, even if the rate that you would pay maybe would be a little bit more, how much actual generating additional income would you be making off that? Right?
Yeah.
At even at 10%, that would be $8,000 a year. At 4%, that's, you know, whatever, $3,500 a year. And then potentially, maybe lower administration fees on each account. Because
Yeah.
we all know how NMAX and EPCOR and all those companies, their monthly administration fees seem to go up all the time.
Mhm. And same thing with insurance, right? I mean, I
Yeah.
just talked to Jacqueline, right? And she was just saying, hey, like um you can go you can be the same person and go to two different I guess insurance providers and they give you different rates and it's because of the insurer's performance, right? If they have a lot of claims themselves last year, well, their premiums are going to be up. So it has nothing to do with you. So it's like, oh, I didn't know that, right? It was just, I didn't know what I didn't know, and now I know, and I need to, do better and just, not just sticking with the same insurer for 20 years and actually start shopping around, right?
Yeah. Yeah.
So, and I think from an accounting, like I guess just from a finance perspective, right? Like once we get past our, I guess call it our fixed expense hump, right? Every dollar that you make from that point forward is cash in your pocket, right?
Yeah.
So, when we talk about like, I don't know, call it return on investment, right? I mean, it's different when you're kind of trying to grow and you're not there yet, but once you pass that point, right? When you start to think every dollar is now going into my pocket, that changes things quite dramatically.
Well, and we're all self-employed, so it really is return on investment because every minute that we put into our business each day, we're doing so with the purpose of some sort of a return on investment from that, other than maybe deleting, bunch of emails that are just like, yeah, okay, I don't need that today. I don't need that today, whatever. But everything that we're trying to do is an investment of our time. And so when we do that, if we're tracking our time, what return are we actually getting from the time that we're putting in? Go ahead, Doug.
So last year or a year and a half ago, a realtor of mine referred a client to me. Didn't go anywhere. He went silent. Now, fast forward year and a half, the client came back to me and wanting to get a mortgage. Now, I finally got it approved, but worked with a different realtor. And the original realtor, I had that referral arrangement as well. So, of course, I don't want to be that guy. I will honor the referral fee back to the realtor, although he's not working with the client. Because some agents, they you can easily get sidetracked, get greedy, and not disclose and keep the money, right? The realtor's not gonna know, but I just don't want to be that guy. So that's I think a huge integrity to maintain. Now
Yeah.
the second follow-up, right? Second follow-up question is Kendra. So the referral payout, of course, got to be from brokerage to brokerage, right? Is the onus to pay out the other realtors' brokerage? Is the onus on head office or is it on the franchise office? The franchise office, there's too much paperwork, right? So I see if there's a way to include the realtors partners email or payout onto boss under the split section, that would really help us a lot in building this referral network partners that we've been talking about.
So you're saying, can we in the background just automatically deduct from your commission a referral fee to a realtor? I know we have
Right.
in the past, and I will talk to Della about the new technology and how do we structure that, and can we still structure that? Because you're right, it would make everything so much easier, and it's also trackable.
Yes.
Now it makes
Mhm.
everything trackable, right? Without you doing extra bookkeeping.
Yeah. Yeah. And if you have multiple referral sources that are coming in, whatever they happen to be, multiple different realtors or other licensed, obviously it has to be licensed people that you would be paying referrals fees to through Boss. They couldn't be non-licensed people.
Oh,
But
exactly.
being able to track that is, a great further opportunity to see, okay, which realtors actually were productive.
One that would be interesting because there's ways on Boss to keep who your realtors are, and then if we could coordinate that in reporting, what did we get for what we paid, right?
Yeah, exactly. Yeah, absolutely.
Makes sense.
Not only for realtors too, sometimes neighbors that refer or whatnot, right? I know it is kosher for brokerage to pay out our neighbor, right? It just cannot be from the agent's pocket. So
Yeah.
if there's a flexibility to not just realtors, but can be individuals, I think that would help a lot too.
Well, you'll never be able to do individuals through Boss. That it has to be. They can only ever do it to someone licensed.
Under the RICA,
Yeah,
like for realtors as well. Okay.
yeah, yeah. It has to. It would have to be. You could pay a referral fee to anyone who's licensed. So an appraiser, a property manager, a realtor.
Yeah, I think
Another.
for Alberta RICA we can do individual because I've been audited when I had my brokerage, right? As
Yeah,
long as it came from the brokerage to an individual, the RICA was like, okay, you guys are good to go, right?
yeah. But it can't be
Uh,
done not through Boss.
Boss. Hmm.
Because where you have to be careful is that if a referral fee agreement is a brokerage thing, then it becomes a brokerage wide thing. It's just, you got to be careful when it comes to individuals. That's all.
Well, there's
That's why they,
something, yeah, you don't want to involve in your business too, right? Like
yeah,
an example is you receiving a realtor fee. So let's say they pay you $500 flat fee for a referral. You don't want to run that through your brokerage. That's separate.
yeah.
Part of your business, but not through the brokerage.
You probably want to invoice the realtor for a fee,
Yeah, because you
marketing
can
fee,
only
a
be
marketing
paid
fee,
mortgage services through your
a
brokerage.
marketing fee. Yeah,
Yeah.
yeah. And you could
Thank
have
you.
a realtor, you could do the same in return for a realtor. The revenue comes into you, and then you have the realtor issue you a marketing fee invoice.
Okay.
I've had that.
Let
I've
me
done
check
that
my story
before.
because yeah, I was under the impression if it's under RICA, it has to be brokerage to brokerage. RICA, either us to them or them to us. As long as it's brokerage to brokerage.
It can depend on whether if the agreement is a percentage of commission versus the agreement is maybe a fixed dollar amount for a referral fee. So two different
Okay.
things.
Under BC and Alberta, you cannot pay a percentage to somebody who is not licensed.
Yeah.
Correct.
Okay. Okay.
And in lovely Ontario, Dougie, you're dead on. It must be brokerage to brokerage. It
Yeah.
cannot be direct to an individual
Yeah.
at all.
Are we talking about brokerage referral fees or realtor referral fees?
Well, even realtor referral fees
Yeah.
have to go realtor brokerage to
Yeah.
mortgage brokerage. Cannot go direct in Ontario.
Yeah.
Yeah, so we can't do that here at Mortgage Alliance. We can only pay you, so we can only through the brokerage you can only be paid for doing a mortgage because that's the only fee we can associate. Simple Insure pays you for your insurance referrals,
Yeah.
but so we can never take a realtor fee for you and deposit it to your account because it's not the proceeds of a mortgage business.
Right. But the franchise brokerage has to receive it on their books and then distribute it.
Correct.
That's in Ontario.
That same here. Same for
Okay.
Alberta and BC. Yeah.
So if you get a realtor fee, you're running it through the brokerage. If they pay you $500 a flat fee, you're running it through the brokerage?
Must. Yep. Cannot receive it direct.
Yeah. Yeah, because it's licensee to licensee. Now, if you had a contractor who was after sending a client was sending you a referral fee because you set up an affiliation contract with them, that would be different.
Hey, Kendry, I think you have some work to do.
I know this actually, that you cannot put a brokerage fee through our corporate brokerage. I've gone to the compliance department about this in the past.
Yeah,
right. So I think we need clarity though around which ones come to us directly, which one go to the franchise, which ones go to head office, so that we know, that we're dealing with it properly.
Well, because there's a two-way street there, Darnelda. There's revenues coming in, and then there can be
revenues going out.
Expenses going out.
Yeah. We'll look to you, Kendry.
No, that's totally fine. You know what? I'd rather you guys had the honest answer, and for each province, right? Like, so at least for the three, so I would say the three, Ontario, BC, Alberta, we should have a clear understanding, and we should be sharing that with our franchises. So I appreciate being involved in this conversation. Thank you, Keith.
Yeah, you're welcome. Who knew that's where we were going to go today?
Right, and BC rules are in the process of changing as well, right?
Yes, and we're becoming more like realtors, so that will be interesting. So have you guys seen the new forms for BC yet?
No.
Have fun.
Are they actually going to give us training on them this time?
So they just released the forms, and so I've already reviewed them all, given feedback, but that's like compliance will be doing it. But I always want to be involved, because it's way different when you look at a form from a compliance perspective than when you're a sales or a relationship with your client perspective, right?
So user perspective.
Well, exactly how your client is going to take it. Sometimes we might have to coach on how you're going to deliver this information to your client, right? So I have reviewed it and waiting for feedback from our designated individual corporately for BC.
Okay, perfect.
There you go.
And those don't come into place though until the new law comes into
March or October 13th.
Yeah, October. Yeah. Okay. Yeah. Thanks.
Excellent. Well, thank you everyone for a great discussion today. I appreciate it.
Hold on, I'm going to put something in the chat.
Okay.
Ontario based. It's for Ontario, it's pretty clear.
Yeah.
There is no option to receive it personally at all.
But that's from broker to broker, is it not brokerage to brokerage or client to you tied to mortgage services? So a referral fee from a realtor is not mortgage services. We got to be careful. I'll copy this and include it in my conversation with the compliance department. Fair enough, Stu?
Okay.
Yeah.
Yeah. It's so most important thing to remember is look at your business from the perspective of where could you be generating additional revenues outside of referral fees, even, and create that passive ongoing income so that you're creating this additional value within your own business that you have already with your own clients. Have a great week and have a great weekend. And see you next Friday.
Did you notice over my shoulder, Keith? By the way, that was for you.
Thank you.
You saw the back?
Okay, thanks, dude.
No. Get the Neocitrin. Have a good nap.
Yes.